So we're getting ready to talk about the PPP forgiveness application process. Now, that is coming up for a lot of folks. The bank portals are starting to open up, and people are starting to think about applying. So what I'm going to do today is talk a little bit about the PPP FAQs that the SBA has put out on the actual forgiveness. So let's jump right into it. I'm not going to hit all the FAQs. You can look at them on the SBA website, but here are some of the more common ones that I think you might want to be aware of. One of the questions is, which loan forgiveness applications should sole proprietors, independent contractors, or self-employed individuals with no employees complete? That's going to be Form 3508EZ. So that's 3508EZ. So when you go in to open up your bank portal, either they'll have that there available, or you will supply that to your bank in order to get the process going. One of the other questions I wanted to point out is, are payroll costs that were incurred during the covered period? Now let me back up there for 1 second. The covered period, what is that? So that's the time frame we have to actually spend the PPP money, right? So by default, it was 8 weeks, and then they extended it. It's now 24 weeks. So everyone might as well use the 24-week period. It gives you more time to actually spend the money. So 24 weeks theoretically would be your covered period to spend the money. Back to the question, are payroll costs that were incurred during the covered period but paid after the covered period end eligible for loan forgiveness? The answer is yes, it is. So make sure you take that into account when you're doing your loan application. Another question, are payroll costs that were incurred before the covered period but paid during the covered period eligible for loan forgiveness? So the answer to that is also yes. So that's more of a, think of it like cash basis. When you actually spend the money during that 24-week period, you can use that as an alternative protocol versus using what's actually been incurred but maybe not yet paid during that 24-week period. So you have a couple options there, which is actually, flexible. Another question that I think you should be aware of, are borrowers required to calculate payroll costs for partial pay periods? The answer is, if they use a biweekly or more frequent payroll, then yes, you can actually do that and calculate that on a partial pay period basis, depending if you're using incurred or actually paid. And what you want to do there is use the one that's most advantageous for the business. For questions of the actual pay to employees, remember to use the gross amounts. Don't just grab the net checks for what you're paying the employees. It's the actual gross amount of the check. That's your payroll. So that includes all the payroll costs and all that good stuff. You want to use gross salaries, not net in this case. Are only salary and wages, so here's another one, are only salary and wages covered by loan forgiveness, or can a borrower pay lost tips, lost commissions, and bonuses and other forms of incentive pay, and would that qualify? So this really matters in particular for restaurants and that kind of thing who pays tips, and the answer to that is yes, absolutely. That does count towards the compensation for purposes of loan forgiveness. Here's another important one that I don't want you to forget. What expenses for group health care benefits will be considered payroll costs that are eligible for loan forgiveness? So that's going to be any health insurance premiums that the company is paying on behalf of the employee. You cannot include the amount the employee is having withheld from their check. That doesn't count. It's only going to be the actual monies that the employer is paying on the employee's behalf. So it's the out-of-pocket for the employer that you want to count towards that. So don't forget it. Obviously, that's very expensive, so that can count. What contributions for retirement benefits will be considered in payroll costs? So remember, everything that we're talking about so far has all been payroll. So we're including tips, we're including health insurance, we're including retirement. Now this one, for retirement, you're going to want to include everything that's been incurred during that 24-week period, because retirement plan contributions likely or may not likely have been paid during that 24-week period. You know, a lot of times profit sharing contributions, for example, they're paid after year end. So they may be paid at the time of filing the corporation's tax return. So they may not have been paid during the 24-week period. So in this particular case, you want to go with the incurred. So how much has been incurred during a 24-week period? Well, that's 6 months. So that could be a significant portion that's been incurred but not yet paid. So you want to make sure that gets included. Another question. How is the amount of owner compensation that is eligible for loan forgiveness determined? So in this case, it's pretty simple. The actual cap for the 24-week period is $20,833 per owner. So that's the cap. You can't go above and beyond that for a request for forgiveness for the owner. $20,833. So now I'm going to jump to non-payroll costs. So we've covered a lot of payroll costs, and that's going to be the biggest portion of all of this. So let's just talk about some non-payroll stuff. Our non-payroll costs incurred prior to the covered period but paid during the covered period eligible for loan forgiveness. The answer to that again is yes. So it's the same concept as the payroll cost. If it might have been incurred but paid during the covered period, that counts. Love saying yes. Question, are non-payroll costs incurred during the covered period but paid after the covered period eligible? The answer to that, also yes. So again, you're going to look at incurred, paid, whichever one is higher, you're going to go with the higher number. The 24-week period, changing that from 8 weeks really helped a lot of people not have to worry that they're going to spend the money. So most people are not going to have an issue, but nonetheless, at least be aware of it. Is interest on unsecured debt eligible for loan forgiveness? The answer to that is no. You can't use that, unfortunately. Loan forgiveness reduction. Now, I'm just going to touch on this one. This gets a little complicated. So what they're talking about here is when you have a reduction in number of employees. So you started in February with 100 employees. COVID happened, and now, you know, the end of the covered period has occurred and you are down to 98 employees. Well, if you can prove that you made an effort to rehire those 2 other employees and they declined, you're not going to have a reduction in the actual loan forgiveness amount under this provision. So you just have to provide a couple of things. One, you have to notify the state that you requested to rehire them, the state unemployment office, within 30 days of the offer. Second, you have to show documents that that prove the employee rejected the offer, and obviously your written offer to rehire the individual. So you have to provide all that stuff in order to support your claim, but you're going to want to do that just in case you have that particular issue where you have an employee reduction. So just a couple of points as you go through the PPP loan application process. You know, it sounds a little overbearing, particularly if you have the reduction in employees that is happening. So that can be a complicated calculation. But if your employees maintained during the period, it's actually not a bad process. So you shouldn't have a hard time. So hope that helps. Ryan Sheppard, Knight with Larry Sheppard, CPAs. I'm one of the partners here. If you have any questions, you let us know.